Okay, well, I first got involved with this project in 2004 in the last market cycle, and we raised quite a lot of money and spent quite a lot of money defining a giant resource. And then what happened was we did a lot of metallurgical work, a lot of engineering work, came out with a PEA in December of 2011. Nickel was at $11 a pound at the time. Things looked pretty good, and nickel proceeded to slide to $4 a pound. And I had a choice to make. Do I try and soldier ahead? I decided not to soldier ahead with it. I decided to basically put it on mothballs until the market would turn around. No point spending money on an out-of-the-money asset, was my thinking. Now, the downturn took a lot longer than I thought, a lot longer than anyone thought. But the market is turning, and it's, a lot of people are talking about electric vehicles and batteries and so forth. So we can make a nice clean concentrate reliably using off-the-shelf technology of 18% nickel and 1% cobalt. So it's a nickel deposit with a significant cobalt kicker. And what it is a giant, I guess the most succinct way I can describe it is a giant marginal deposit, because it still won't work. Nickel's around $6.50, $6.60 a pound now. You really need $9 or $10 nickel before this project works. And so if you don't believe the electric vehicle story, this story is not for you. But this is all about optionality, at least in terms of the resource that we've got. I'll be talking a bit about exploration upside in a moment. I've got a few slides here about the nickel market. I don't think I'm going to spend too much time with them because you're probably quite familiar with that story. But this is a sulfide deposit capable of making Class 1 nickel. And really, if you believe the EV story, as I've come to, there's going to be a significant shortfall of Class 1 nickel by 2025, something on the order of 300,000 tons a year, which is 6 huge deposits coming on stream. And I think that our competition of this massive low-grade sulfide nickel deposit is HPAL projects. So if we can come in with an incentive price lower than an HPAL project, I think we've got a chance of getting built this market cycle. And that just shows, this is Bernstein's forecast on a nickel deficit, and it breaks out the Class 1 nickel deficit, roughly 300,000 tons per year by 2025. And we're trading at a substantial discount to our peers. Now, what this shows you, we're at the PEA level. And by the way, we're planning to get to pre-feasibility by the second or third quarter of next year. We've decided that the time is right to advance this project. And I think as you advance to pre-feasibility and feasibility, there is some credibility that comes with that. Now is the time to spend the money and do that. Our goal is to be shovel-ready by 2021, which is when we think that the nickel shortages will really start to bite. And again, this could be a very large project, 44,000 tons a year on our current PEA model. That model is out of date, December of 2011, but we're going to go straight to pre-feasibility rather than redo a PEA. We're aiming to get smaller startup. And there's some things that have changed in the last few years. When we did our PEA, high-pressure grinding rolls were kind of new, and the mining business didn't really accept the technology as sort of plain vanilla. That has changed. High-pressure grinding rolls have been used enough that it's now an accepted technology in the mining business. And what it'll do for us is it will cut our power costs, compared to a SAG mill. It'll cut our power costs by more than 20% net. But it also, the advantage it gives is there's a tighter range in the particle size when you grind it. SAG mills have a wider range of particle size. And this will help our recoveries, we think. But this is all part of the engineering studies. So when I say a marginal deposit, when we ran the model, this was assumed $8.50 a pound nickel, $14 a pound cobalt, and an exchange rate of the Canadian dollar at 95 US cents. I've got the model on my laptop. I ran it at $40 cobalt, an 80-cent Canadian dollar, which is currently about 75 cents, and $9 nickel. And then you get an after-tax internal rate of return of close to 21%. So it's right on that edge. You get $9, $10, $11 nickel, this project starts to look very robust. We're sitting with a market cap of about $8 million right now. So when I talk about optionality and leverage, it's huge. If you catch a tailwind in the commodity itself, this is where the big money is made. It's also, you know, riskier than an in-the-money play. Good jurisdiction. And this just shows you our topology. To the west is the Coast Range Mountains, you know, the Golden Triangle. We are in the rain shadow of the Coast Range Mountains, so we don't get the 50 feet of snow that you can get in there. Typically, we get 2 to 4 feet of snow in the wintertime. So we were discovered by a fellow named Mike Beck, who was looking for exactly what we've got. He was looking for a huge deposit with high optionality. And he discovered us last summer. And we've done quite a bit of financing since he discovered us. We're sitting on about $4 million in cash right now and planning a drill program. So this is where the nickel deposit is currently. That whole belt of orange and pink is very similar to what we've already drilled off. So, you know, but we got to the point where you don't really need to drill off anymore. But there's exploration potential here. This was a magma chamber at about 4 kilometers depth. It then froze, rolled over, so the southern contact was towards the top of the magma chamber, and then the northern contact is a fault. So the bottom of the system got faulted off and transported. We've never found the roots of this system. And so if you go back, so this ultramafic, and by the way, these are 1 kilometer squares here, just to give you a sense of scale. That's the same ultramafic there on our mag. That mag signature to the north is unexplained. And I've been looking at it and wanting to drill it for 6 years. We finally got the money to drill it. That could be the roots of the system. There's also 2 other mag anomalies right at the north end of our property that show up on the regional government mag survey. We're going to fly those early this summer and drill those as well. So just a brief summary is we've got a huge marginal, low-grade, open-pittable deposit with tremendous levers to the price of nickel, but we've also got some exploration upside here. If we could find the feeder zones to the system, it could be a game changer for us, and we're going to drill them this year, late June, early July. There's the investment thesis. This whole thing's available on our website, by the way. And we've added a couple of directors recently. Pala Investments has become quite a large shareholder, which is unusual for them. They normally don't write checks smaller than $20 million, but they've taken a bit. They own about 6.5%. And Philip Robinson is their representative on our board. Also John Hikaway, who many of you may know, who's an expert in battery materials. So we've got good financial backing, and we're going to drive forward. Capital structure, that's all on our website. So any questions?